Today let's discuss about integrations within the bank and how technology integrations play a role. So if you have to reflect, integrating two banks could be quite complex, and technology is today backbone of any banking systems. So when you see technology, there's typically three-phase process on technology integrations. Phase one is where we develop integration strategy. As part of integration strategy, we look at what is the strategic objective in terms of shareholder value maximization, acquiring a new customer portfolio. So we understand the business objective of a merger or an integration. Looking at the business objective and integration strategy in mind, what would be the integration objective for technology? In many cases, it could be simplification of technology or significant cost reduction because of synergies or delivering superior customer value, or it could be all three of it. So it's very important to define integration objective and integration timelines. So typically integration timelines go in terms of period between transaction announcement date and legal day one, and a legal day one to integration day one. Now let's understand what's a legal day one. Legal day one is legally the day when merger is effective, when customer and portfolio becomes one. So typically you should have your integration strategy for technology articulated, agreed, and design completed by the time integration strategy period ends and legal day one comes. Typically execution of customer technology, which is channels, branding, all of these customer aspects should happen on legal day one, and then you typically get a duration of 6 to 12 months to run integration of complex mid-office and back-office systems. Again, when you define integration, it's defined in three different parts. Part one is applications. So we have to choose best applications, merged enterprise must have. Now when you choose the application, it's driven by business choices and product choices. So based on a product integration strategy, you take systems which are more feature rich for the customer and which has highest amount of customer onboarding. So given this perspective, second key aspect is technology. How do you ensure that technology is aligned to customer applications? So based on applications chosen, the underlying platforms which needs to get integrated gets identified. Based on a platform, then you look at the third and a most important aspect, which is around migration of the data. So you carefully look at end state architecture and take decisions of migration based on end state. And then moving towards an end state, that could be an interim position on migration, and then there could be a final position. So all of this is defined using retain, replace, or upgrade decisions, which we take right up front. So as we've learned through the experiences, defining an end state right up front is clearly a mantra to make a successful technology integration, and then rapid speed is a second mantra to make it a successful and less impactful for trouble for the customer. Thank you so much.